This is Scott Varilek, Koima Varilek Trading in Sioux Center, Iowa. Glad to be with you again. This week we have seen both sides. So if you're bullish, you're bearish, you got what you wanted at some point in this last week. Market fundamentals all looked pretty good. Cash, everybody was feeling we're going to get a higher cash trade from the Packer. 130 was the asking prices kind of set across. South was able to get up to 128, so they did get a little bit of a boost, couple dollars higher for them down there. The 130 didn't come as easy as everybody thought, and there were certainly people thinking we might get higher than that as well, but we suddenly feel like we have a little bit of leverage over the Packer. They're a little bit short bought, need some cattle, and overall we've had a large shift. We used to have such a wall of cattle in the fall. That's not necessarily the case anymore. We've got so many people that market their cattle in the first quarter, actually more cattle in the first quarter than we do in the fourth quarter now, say in the state of Iowa or in these northern sectors. So everybody's been trying to feed for that spring rally. So we don't really have that wall. Feel like we have the leverage. The confidence just kind of dwindled away when the 130 just didn't quite happen. The futures were off and running. We gapped higher. All the news was good. But it just doesn't feel like the good old days. It doesn't even feel like it's been that long ago when Packers needed cattle. Some of the purchases they did have are going next week, so they feel like they need them now. But it just kind of dwindles off. We're unable to follow through with that strength. But the more we negotiate cattle, the more cattle that we do negotiate, it does feel like we get that price higher when we have the ability to ask for more. It just didn't quite get as high as we probably thought it could. We've had a sharp correction from that rally up. Everybody was saying a breakout on the charts for the cattle contracts. Here we go, a lot of high fives and cheering, and just to be followed with some severe correction and crawling back down into that gap. There has been a lot of fund trade noted, guys that do cattle hog spreads. That means they're buying hogs and selling cattle and kind of doing that against each other. Seems to be the theme as hogs have had a couple days run here and cattle start to get whacked a little bit because of that. So we are noting that news out of Chicago. Grain's pretty good correction after a sharp rally. We've got the dollar higher, and we've got some of the energy markets experiencing a little bit of volatility, so keeping an eye on that. I think there's a growing crowd looking to make sure their feed needs are covered with the corn, just looking at next year's input, so that story's still there. March corn's coming about 6 cents away from an uptrend line, so it's going to be a spot to see if it's going to hold. Are we going to trade that we're going to be worried about next year, or are we worried about the big yields that we have in WASD report coming up on Tuesday? With that, the risk of loss in trading futures and/or options is substantial. Have a good week.